Welcome to Breaking Banks. Welcome to Breaking Banks. This week, we're going to dive into crypto in the banking boardroom. And joining me in the hosting seat today is my good pal, Dave Birch. Welcome back, Dave.
Hey, Brett. Thanks for having me.
You're not in Woking today. Where are you?
Not in Woking. I'm actually down in Australia today.
Down under, mate.
Part of my Asia Pacific tour.
Your world tour. You just got done in Singapore where you did an event for Huawei talking about the metaverse. What's Singapore like? Is it coming out of the pandemic well?
It was great. It was hot, but actually it functions. I mean, people do what they're supposed to do. People wear their masks. Yeah. Everyone goes about their business. It was great, and it was great to be at a big event, listening to lots of different people, getting lots of different perspectives. So personally, I really enjoyed it.
It's not exactly a mystery, is it? You look at Singapore and Taiwan and South Korea and Hong Kong and so forth, and they've got much lower mortality rates on COVID, and it's just because they're disciplined in respect to mask compliance and stuff like that. But anyway, I don't want to get into.
But they've been through it before. I mean, I remember a few years ago, Brett. Yeah, I was in Singapore when SARS was on, and as a visiting Westerner, I thought it was crazy. Everyone wearing masks. The guy in the elevator would come and wipe the elevator clean after you press the button.
And the temperature.
I thought that was weird.
Things when you walked in.
And now, now I realise they were just so far ahead of the curve.
Yeah, they've learned from it. Yeah.
Yeah.
All right. Joining us from our sponsor for today's show, FIS, is Fiaz Sindhu. He's the Vice President for Mid-Tier and Community Banking. Fiaz, welcome to Breaking Banks.
Thank you, Brett.
And also joining us from FIS is Himal Makwana. He's the SVP, Head of Product Strategy and New Initiatives. Himal, welcome to the show.
Thank you very much, Brett. Good to be here, and really excited to get into this topic.
So let me just start off with, the big question on crypto right now. It appears to have bottomed out in terms of the crypto crash is starting to recover a little bit, but now that we've had that, how do you guys think that crypto is, crypto's relationship to banks in the United States has changed? Has it given banks in the US an excuse to say, let's hold off, or is there still the same pressure to integrate crypto and blockchain and other technologies like that into the banking sphere?
Yeah, I think that from a market perspective, Brett, there's still quite a bit of education going on in the space. The regulatory climate in the United States is ever evolving in the crypto space. There's a lot of legislation that's being explored on the Hill in Washington, D.C. There's a lot of policy initiatives that the Federal Reserve is looking at. But from a banker's perspective, I think that they're looking at this through two lenses. One is through the technology lens, right? The power of digital money, which is defined as things like Bitcoin, stable coins, et cetera, which really represent a new format of money, a programmable type money that could live outside of a bank account potentially and be programmed directly into a blockchain. The implications of that are very significant from the standpoint of payments, lending, liquidity, and how all those activities can work in the future. So I think that's one thing that bankers are thinking about and paying attention to in terms of how this technology could drive some incremental utility for their institutions. The other aspect of it that I think is important is how bankers and customers are engaging with these instruments today. There's tens of millions of Americans that are holding cryptocurrency today, and and Bitcoin being the largest one by market cap perspective in terms of number of holders and wallets. And the customers that are participating in those instruments are acquiring them through non-bank channels. So, and some of the channels they're acquiring these instruments through are, let's say, bank-like in terms of how they're going to market, the emerging super app ecosystems, to name a couple of channels. So banks are watching that and looking at how clients are engaging with these instruments and what the implications could be in the future for clients that are engaged with those instruments and how they might be using them in the future, in terms of they're looking at something like Bitcoin and how that might be used for payments potentially in the future. And if banks aren't at the table, that represents a threat to them potentially, if they're not servicing clients in that space. So that's my perspective from a market view, but I know my friend Himal has a broader lens from our product organization, so I'll let him comment as well.
Yeah, it's a great question. Listen, I think if I split the banking segment in the US between large and small, large being everyone from Goldman Sachs, Citibank, etc., they've invested millions and millions, hundreds of millions, you would say, in trying to hedge themselves against kind of being completely disrupted and disintermediated, right? And you've seen that through public investments in blockchain type companies. I think the other thing that they've done extremely well is also offer custody services through partners like Metaco, Fireblocks and Copper, because they're sitting on a wealth of traditional assets in the trillions, and they know that this is a revenue opportunity on getting custodial fees as a result of that. So I think that's been a wave that's is largely in place, and I'd say that's quite mature and ever growing now in other parts of the world, including Europe and the UK. I would say the mid to smaller tier of the banks, I think from the conversations that we have with our clients and our partners, there's a lot of interest, right? But I think I would describe it personally as a bit of a penguin effect. They're still waiting for one of the mid to small ones to kind of fall victim before they all move in, and nobody moves until everybody moves. So I think, regulation and two factors. One, what's happened in the algorithmic stablecoin market. And then also, as you mentioned, Brett, being in a crypto winter, not our first and certainly not our last, has scared people off from a regulation perspective. So listen, that's my perspective as I dissect the market between large and small.
I think it's a complicated question. I mean, like in my head, these are completely different issues. So everything gets wrapped up as crypto, but cryptocurrency, or in particular, cryptocurrency and digital currency and digital assets are really three completely different businesses. And banks, ought to have completely separate strategies. I have always taken the position that digital assets and tokenization are much more important to the banking sector than cryptocurrency. The crash has, hopefully brought forward the demands for sort of proper regulation. But an awful lot of people have lost an awful lot of money, and I don't care about rich people. Digital currency, I think, is a little bit different, because in most countries, digital currency has at least come over the strategic horizon. So the big central banks, like the Bank of England and the Fed, are saying, we're going to have a digital currency. We're not going to have it tomorrow. It's complicated, and we need to work out exactly how it's going to work. And for the big banks and the acquirers and the issuers and so on, it makes sense to start developing that strategy. They don't have to do anything about it tomorrow, but they do have to start developing a strategy towards it. I think Himal hit on the biggest priority to me is tokenization of digital assets, because the tokenization of digital assets, if you talk to the serious finance people, their attitude is basically, as soon as the regulation's in place, we'll tokenize everything. And they mean everything, because they don't care about it from a sort of libertarian point of view or some sort of philosophical point of view. They don't. What they care about is trading assets without clearing and settlement. And to them, that's a much more liquid, much cheaper market. And the sooner they can do it, the better. And the demand for the kind of custody services that Himal is talking about, I think, is going to be huge. No sane person wants to be their own bank. Like the idea that I'm going to store all these assets on my USB stick and wrap them up in tinfoil and bury them in a biscuit tin in my back garden, it's not going to happen. So Himal hit the nail on the head. The big strategy right now is tokenization of digital assets, and there's lots of roles that banks can play in that, like custody.
So, I mean, the reality is, I mean, we talk about custody, but customers aren't exactly, breaking down the doors of their banks to do crypto. Yes, there is, Coinbase and other exchanges who've done some value.
To Himal's point, I'm going to be storing digitized assets of all kinds in my 401k, and I don't want them on a USB stick. Yeah. I want them in the bank.
Yeah, exactly. So Himal, is that is that FIS's position that the banks lend a certain credibility to crypto custody that is what crypto needs, or where do you guys see it fitting?
Yeah, listen, I do think so. I think, banks you've got to remember, banks, the oldest one, Banco di Napoli has been around since 1463. So you could argue it which way, but they've stood the test of time of people parking money at an institution because they trust it, right? And I don't think
Are you talking about Monte dei Paschi de Siena, 1472?
No, Banco di Napoli in 1463. 2 years
there you
ago.
Go. See, that's an older one than
slightly
Monte dei
older
Paschi.
Slightly older one. As of 2 years ago,
it's like 9 years older. I there you go.
Yeah, 500 going on 560 years. So listen, coming back to the trust question, I think banks have obviously stood the test of time of all sorts of digitalization journeys and disruptions that have happened over the last few hundred years. You could argue, is this time different? Is this a new wave of technology that is going to be different this time? I'm not sure I'm in a position to answer that. What FIS would say is, look, we want to provide the infrastructure to banks, whether they're allowing retail customers to store crypto assets or custody for institutional players, or offer value-added services that are built on the blockchain. FIS certainly wants to be the provider of the infrastructure, completely agnostic, by the way, to any blockchain, any digital token, even any protocol for that matter. So that's what we would say we would have the right to win in, given our scale and how many large banks and US banks use our technology for day-to-day running of their business. I think the other point to kind of bring in is, if we, as we see kind of demographics shifting and the power of Gen Z and other generations to come, the brands that they trust and identify most with, I think banks are starting to recognize that may not be them for that generation. So you've always got big questions on top of banks' heads when they're serving retailers is, am I going to get trust from that person to do traditional kind of money, let alone crypto or digital assets or anything else funky in digital form, right? In a day when we're all living in the metaverse or not. So I think those are some of the big strategic questions banks have to answer, and that will depend heavily on which way their strategy leads them.
Yeah, this fits into broad community banking strategy as well, because if we look at the US market in particular, but it could be said of, certainly Western Europe, Central Europe as well, more recently, and to some extent Asia. But, we've seen a fairly significant consolidation in the number of banks. And we have now seen since 2008 sustained decline in branch banking. So from a positioning perspective, there's a lot of pressure on community banks to remain relevant. How do you think crypto helps them in that regard?
Yeah, and I think it's a great question, Brett. So, the threats that the legacy traditional banking system is facing are really multifarious in scope. And, we talked about Bitcoin a little bit earlier and super app ecosystems. So if you look at Square and PayPal, they've got tens of millions of customers that are holding cryptocurrency through those channels. Bitcoin specifically is a dominant one. Square is exclusively Bitcoin. PayPal offers a mix, but a big chunk of their wallet holders are Bitcoin holders. And, those ecosystems are eating into what has traditionally been the bank space, right? From a payment, at least on the retail side, right? From a payments perspective. And we can see where the puck is going. Some of those companies have been pretty vocal in terms of what they envision their long-term strategy is going to be in the retail space. So if you take a step back and look at the macro picture, roughly 25% of Americans are holding Bitcoin today. That means about 75% aren't. Of those 75% who aren't holding it, more than half of them would be willing or more interested in holding it if they could get it through their bank relationship, right? Through a custodial wallet. So banks should really not be looking at the space as a threat, really should be looking at it as an opportunity, especially
it's an asset class, right?
Absolutely. And potentially a payments instrument in the future, right? I make no moral judgments about Bitcoin or some of these other
Sure.
uncollateralized cryptocurrencies, but one can't ignore what's happening in the market. It's not going away. You can't ignore what the super app ecosystems are doing in this space. And from a community banker standpoint, they've got to think about how they stay relevant, to your point, Brett, given the competitive pressures in the market, given the pressure on traditional income streams that banks have relied on in the past, like overdraft. Banks have to diversify and find new ways to engage their clients and monetize those client relationships in crypto, stable coins, again, under the auspices of what the regulators would allow the banks to do, is an area that we think banks absolutely have to explore to differentiate their proposition.
Good point.
In the US, there's been this focus on sort of banking charters and banking regulation. I just wonder if any of the thinking is changing in that direction, because as an outsider, it's not obvious to me that that's the best way forward. And I'm very curious what Riaz thinks about that.
Yeah, I think that, none of the crypto companies in the US they're not banks, right? A number of the large custodians are not banks. They're operating with money transfer licenses, or they're operating with limited trust charters in some cases. But, what's happening in the US right now is we have a lot of activity. I alluded to this earlier in Washington in terms of getting the banking system engaged in this process. And, some people have different views on what's driving that, but I think the view in Congress and coming out of the policymakers seems to be around mitigating systemic risk. And I think, Dave, what you talked about earlier in terms of people losing a lot of money in the last few months in some of the more speculative, the whole crypto market's been depressed, but the more speculative instruments have been hit really hard. There's quite a bit of pressure coming down, from the Federal Reserve, the OCC, the Congress, the CFPB, in terms of protecting customers in this space and making sure the assets are regulated by the appropriate prudential regulator, whether that's the SEC or the CFTC, et cetera. I just think that Europe has been a little bit ahead of the curve, I would say, in some respects, in the space of crypto and embedded finance with the open banking, et cetera. I think in the U.S., the prudential regulator is written for banking, the OCC, and they've got a very strong hold on how financial activities are governed and operated in the U.S. And I don't see that changing. I think there's just a really strong focus in the U.S. on mitigating systemic risk in the financial services world. And I think what happened in 2008 certainly is still in many people's memories.
There's a lot of pushback on that OCC sort of federal banking charter, isn't there? The sort of fintech banking charter. But reading some of the rules,
got sued by the New York Fed, who didn't want the fintech charter, which is crazy to me. Like, the US is like the only developed market that doesn't have a fintech charter. But anyway.
Yeah, but that's because they were trying to make it a banking charter, whereas my point is, if you look at something like the Indian Payment Bank or the European Payment Institution,
they get a specialized charter.
There's a different framework, which, because you're taking the credit risk out of it, deals with a big part of that systemic failure problem.
Yeah.
Fiaz is absolutely spot on that. It's so, maybe over the coming months, the pressure for regulation will grow. But hopefully, the US will look at what's going on in some other parts of the world. Because I think that might be a more practical way forward.
Yeah, I think the crypto area is an interesting one to watch on this front, because one of the really active dialogues that's happening is around stablecoin regulation and who can issue stablecoins.
Yeah, absolutely.
And stablecoins have they have potentially great utility in the payments world potentially. So there's quite a bit of debate on this, and one of the policy positions being talked about is, maybe you don't need to be a fully reserved bank to issue stablecoins. We'll see where things land.
Yeah,
we'll see where things land. But it's part of an active dialogue that's happening with policymakers. So it could potentially be an area where you start to see the U.S. open up a little bit in terms of letting fintechs participate in these instruments more actively under the auspices of a prudential regulator.
Well, as you indicated, Fiaz and Dave, as also, when we talk about programmable money, smart contracts, and the autonomous world of the 21st century economies, we are going to need either stable coins, crypto tokens, or CBDCs. And so if the US is not going to develop its own CBDCs, they need to let the brakes off stable coins. Otherwise, the E1 and other CBDCs like that could take the US's lunch, particularly if China, applies the E1 to like supply chain automation on the Belt and Road. But Dave?
Yeah.
You agree?
Well, I'd say to Fiaz's point, because there is evidence that the regulators are walking back a little from the idea that the stablecoin issuers have to be banks. So if the stablecoin issuers have their own regulatory category, which is basically you can do what you like as long as you're 100% backed by high quality liquid assets, then I don't see what's wrong with Ford issuing a Ford coin that's used in automotive, or Apple issuing an Apple coin. Great. We want to see competition and innovation in that kind of area. But we just want to protect consumers. And the way to do that, I think, is the European way with the electronic money licenses, where you just force them to hold a 100% reserve. End of story.
Himal, we've only got a couple of minutes left, so I wanted to focus on this portion of it. How do we, if you're a CEO or a head of technology for a bank in the US, where do you start? What do you do to get yourself and your institution on the crypto road?
Yeah, great question. So I would say, listen, at the top of the house, CEOs should appreciate money is being reimagined, and it will unlock a broad set of use cases, right? They have to come to terms with that. I think the stat that comes to mind is, crypto ownership globally, a little bit more in the US, is about 6% of global internet population, marking it at about sort of 300 million users. A lot of the pioneers in crypto and CEOs who have led the charge say that they definitely want to cross 1 billion users globally in the next kind of 5 to 7 years. I think personally, my personal view is you only get there if the banks start adopting and offering this as an asset class, as an investment and a retail offering through traditional means. So I think, they should acknowledge that there's ways to do it which can extract the regulatory or the balance sheet risk. So they can do it through partners, but still keep through their digital channels the engagement of the consumer, who will eventually go elsewhere if they haven't already. So I think that's the first place they should start on the retail side. For the institutional side, we've obviously mentioned the custody piece and the tokenization piece. That's a wave that's crossed critical mass, and I think that will just further adopt through that area. And I think that's on a really fast running train, which is really unstoppable at this point for good reason, right? The technology and the fundamentals warrant that. So I would say, I'd split it to the retail and the institutional side, and that would be my advice to the CEOs.
Yeah, the only thing I would add there, Brett, is I think bankers are going to have to learn an entirely new glossary of terms in the cryptocurrency and digital asset space, which sounds kind of daunting, but really this stuff it's not theoretical physics, right? For people who are in fintech and finance, a lot of the concepts should be intuitive. I mean, some of your listeners will probably have kids who are holding private keys on their phone, who are maybe staking digital assets, or even playing around with smart contracts. And development tools are very easy to access and use and play around with. Bankers, I think, are really smart people. I think they need to look to empower and encourage their talented business and technology staff to read up on this space. There's a ton of information out there. This is a board level topic at most of the banks we're talking
Certainly,
to.
yeah.
And if it isn't a board level topic, it should be.
Now, every time I present to boards, they're going to they're asking about what the future of this is and, how they should be investing. So on that matter, if someone's listening to this program right now, they're a community bank, or a bank in general, and they want to find out more about what you guys are doing in crypto, where do we go?
So we're actually running a special education series right now on crypto. It's called Crypto 101 under our FIS Perspectives initiative. So folks who are looking for more information, just go to fisglobal.com and they can register and get more information there.
Great. Fantastic.
Thanks so much for that, guys. You're listening to Breaking Banks, and we'll be back shortly.
Parker Graham's path to becoming a fintech founder was full of twists and turns. He began his professional career as a tackle for the Baltimore Ravens before working as a private banker at Bank of Oklahoma. In 2018, Parker founded Destiny Wealth out of a bank-run accelerator, But then he gave up the safety net of his day job as a banker to dive headfirst into pivoting the company, relaunching with new funding and a major bank client as Finotta in 2020. Finotta helps banks and credit unions personalize their mobile banking experience with financial journeys that increase engagement and create new revenue streams. In this segment, we'll dig into Parker's experience working with a bank as both a major client and investor, what it means to let yourself be vulnerable as a business leader, and much more. Welcome, Parker. It is so great to have you today. Thanks so much for joining us.
Thanks for having me, Amber. I'm excited to chat today.
Awesome. I hear that we are taking time out of your company, all hands. You've got the whole team there in town. How's that going?
It's been awesome. Today's actually the last day, so it's the saddest day every single time we do this. We do this on a quarterly basis, and on Fridays everybody leaves and goes back to their respective places. So we had our last team event last night, and got to hang out and have fun, eat great food, just kind of the thing that we always get to do throughout the week when they're all here. So yeah.
Very cool. I hope everyone had a good send off and safe travels back home. And where are you guys based, Parker?
So the company is headquartered in Kansas City, actually a suburb of Kansas City, Kansas, called Overland Park. So that's where the company's headquartered. There's a couple of us here in the Kansas City metro area, which is awesome. But actually, we are a fully remote company. So while we do have a little like co-working space office, the majority of our company is actually all across the country, which is really cool. Everywhere from Portland, Oregon, down to Texas, out to New York. So we kind of cover the whole 50 states. Yeah.
Yeah, very cool. Very cool. And so much easier to find the right talent when you can be open to anywhere.
It definitely, it's funny. I was talking about this today. It surprised me when we went fully remote, how many people we got that live in Kansas City. Like I was really fully expecting to just have people all over the place and everything, but really like 50% of our companies, a little bit more than 50% of our companies is based here in Kansas City. So just kind of a fun little happenstance.
That is very nice. And tell us about the company, about Finotta, just a brief little synopsis. Of course, we'll dig into more of what you guys do later, but the elevator pitch, if you will, would be great.
Yeah, so Finotta is an embedded banking technology company, and embedded banking is kind of like the big buzzword in banking, just period right now. But what that means to us is we're here to really help banks improve the digital channel by providing personalized financial guidance and personalization features directly to their customers that are using that mobile application or digital application to really create revenue for the first time in that channel and to really improve the financial health of their customers, and not just one group of their customers, but the entirety of their customer base. We've been working on that for about 4 years now. It'll be 4 years in September. So it's been a wild ride. And it's just exciting to hear the stories of how impactful we've been for both banks and their customers every day. So it's a lot of fun over here.
That sounds super fun. And I love that you're a neighbor of mine. So I'm a little south of Parker and his team here in Oklahoma. Yep. Parker's alma mater is Oklahoma State University, where he played football, and he did a brief stint in the NFL before his career as a banker began. So Parker, I have to ask, because it's one of those things that people are always curious about. Is there anything that your football career taught you that you've carried on in the rest of your career, whether it be banking or here in Finotta? Any lessons, attitudes that playing the sport at that level was able to give you?
Oh my goodness, that is such a good question, Amber. It's a lot. There's just so many different things that you get because you have to go through these battles. You have to go through these really trials and tribulations just to be successful in sports, at the college level, professional level, and all those things in between. And it's very similar to starting a company. You have to go through a really, sometimes a really long period of pain for numerous reasons. And so for me, I would say the biggest takeaway that I had from playing sports just my whole life is just having a really high pain tolerance versus others. That's pain to withstand, negative things that are happening, whether that's, with the company or employees or, just technology not working right, just being able to handle that pain and really figure out the best foot forward, the best, kind of next step, if you will, without getting too clouded in like the fact that you're experiencing something that just isn't much fun in the moment you're experiencing it. And the second thing I would say is just teamwork. Being a part of a team, and being successful at any level, you have to be able to adapt in different environments with different people, with different skill sets. And the cool thing about playing those high level sports is that you have to do that within seconds, fractions of seconds, like all at once, operating in unison. And it's a lot like building technology companies and even in banking, especially, where you're having to work with different people and different lines of business and figuring out how to help them and how ultimately help customers. It's a cool teammate atmosphere that you get to continue to have ongoing even after my career was over. So I try to live in that as much as I possibly can.
Well, I have played a lot of sports in my day, and those teams, I remember having such a great sense of camaraderie. So if you were able to build that kind of team, like a sports team within Finotta, that sounds amazing to have that kind of collegial atmosphere. It sounds like resilience really is what playing sports at such a high level seems to have imbued in you. So
yeah, I think you have to have that. I mean, in any I wouldn't even say really in building a company, just like period, to be successful in anything, you have to be able to withstand the good days, withstand the bad days, and kind of not get too high and not get too low, just kind of be steady Eddie in the middle. And that's just really helped not only myself, but like our entire team just get to where we are today. Because there are really high highs and there's really low lows. But getting to that next step and again, doing the next right thing for our users and our customers and our banks is just what brings us all together every day.
That's really funny that you say that, Parker, about not letting the highs get too high or the lows get too low. That is almost word for word the same advice that Jason Henrichs, is CEO of Alloy Labs and obviously like the main Breaking Banks host, and my former boss, when I spun out Totem recently, like this week, during that process, there were a lot of times that things got super intense, and like I'm not a highly emotional person, but I was having a lot of struggles dealing with being on this constant roller coaster of change. And like you said, you're popping champagne one moment and then thinking the world's falling apart the next. And Jason told me the exact same thing that you just did. You just have to not let it get too crazy either direction, and that'll help keep you even. So it seems like we might have just unlocked a universal truth of entrepreneurship.
100%. And I think that, everybody's story is different, but the one thing that remains the same is that you're going to experience adversity. It doesn't matter, it doesn't matter how good the good days are, you're going to experience adversity. And it's my belief that how you handle that adversity is actually what dictates success or not finding success, if that makes sense.
Yeah, absolutely. So you also do a podcast for Finotta. And I listened to a lot of it. And something that struck me about that was that you guys are really candid, sometimes getting, vulnerable, discussing things like founder loneliness and these great moments of celebration also, and just like the roller coaster of emotions, being open to sharing that story. So can you tell me a little bit about the podcast, why you guys decided to do it, what the plan is going forward for your next season, all that good stuff?
Well, it's just so funny that you mentioned this because we had a good big discussion yesterday about what we're going to do with it forward. So this is perfect timing. The genesis of it really started in the sense that we wanted to tell our story. And we realized as we were talking to customers that, tech companies are viewed a certain way, especially in banking. A lot of companies are doing the same thing. And we really believe that we have not only a special company, but a really special, unique culture. And so we wanted to tell that story. And we felt the best way to do that was via a podcast. It's kind of like the number one thing to do post-COVID, right? Is to start a podcast. And we really wanted to do it a little bit differently. So we kind of did, we have a great podcasting team. They've done an incredible job. It's for as small of a company as we are, it's probably one of the most high quality podcasts I've ever listened to. And that makes me really excited.
And what's the name?
The name of our podcast is Once Upon a Startup, the Finotta
Once
story.
Upon a Startup. Okay. Yeah. All right. Sorry. Keep going.
So if you're listening, just go Google that or put it in your search bar on your Apple Podcast, Spotify podcast. So yeah, we wanted to tell our story, and we wanted to give people a peek behind the curtain as to what a startup really is all about. And it's not about the champagne pops. Those are fun and you get to have those too. But it's really about bringing people together from all different walks and backgrounds and, cultural differences. And they've been a part of, good companies, bad companies, and trying to create a unified front to go take down a really audacious, big goal. Ours is to create financial equality in banking. I mean, that's what we want to do, and create financial equality across the country. And so, if you kind of work yourself backwards from that, you really have to do things differently. And so we wanted to create a podcast that would go into the candid, life of being in a startup, and not as being the founder, because there's so many founder stories out there, which is awesome. But we wanted to give everybody a look at like everyone in the company, not just
you have a lot of teammates on the podcast, from technical folks to marketing folks. Curious what it feels like for them to be on that side of the mic. But yeah, there's a great variety on there of voices telling that story.
Yeah, absolutely. And it's cool too for me because, I get to hear their thoughts, and like, at different spots in our story, I got to experience a certain viewpoint of it, but then they also got to experience a certain viewpoint, and to get them to tell that story is just really cool for me and the listeners to get to hear. It's been a lot of fun.
Cool. Well, so I mean, I'm so glad that you brought up your mission, creating financial equality in banking. That is definitely a really big mission. And I want to kind of go back to the beginning, because that's the mission now. But from what I understand, you guys actually started with a little bit different model, doing the NBKC accelerator there in your area, right? Can you tell us a little bit about that
so
original founding story?
So the original founding story is I was working at a bank. I was at a bank in Oklahoma, a $40 billion institution, and had this idea of starting a direct to consumer company, or direct to user company, called Destiny, no pun intended, with our head of marketing now. But basically what I wanted to do is I wanted to help people in debt. I saw a lot of wealth management type of fintechs being created at the time. And I just thought to myself, well, shoot, debt's a huge problem. Why is no one solving that problem? And so that was the original genesis. And that's why I joined the NBKC Accelerator, was to really help bring that product to life. Learn very quickly, as most entrepreneurs do, that ideas are a dime a dozen, and you've really got to focus in on what users want and what your customers want. And so in 2020, we made a pivot and name change, and took a little bit of our technology and what we were finding successful with users, and basically double, triple, and quadrupled down on it. And that's actually what became Finotta, and what Finotta is today.
That's a great story. Again, resilience, right? Being able to pivot is a part of that. And I love that it started out with an NBKC accelerator. They're a really cool bank. And obviously with your banking background, you were probably, gravitated toward that a little bit. We'll definitely talk more about your work with banks here pretty soon. But I wanted to stay in the past for just a little bit longer, because you have this crazy story where I believe that the story goes that at one point you quit your job, and so that you could spend 1 or 2 months, I think, or maybe 3 months, and your only goal in life was to find that first customer. So can you tell us, take me back to that moment, how scary that was, how you decided that was necessary? What was that about?
Yeah. So in 2020, actually, this is just another lovely COVID story. So in 2020, it was about the third quarter. So this is like August of 2020, I believe. And basically I had myself and 2 co-founders at the time who are no longer in the business. And basically we had $30,000 in the bank, and we were eking by. We were, just, there was no progress happening on the customer front, no progress happening on the investor front. We all 3 had, different consulting jobs to make our own ends meet. And I was basically sitting there looking at our current, account that we had with our money in it. And it was just like, this is just not going to work. We've got to take this money that we've been given by investors and give it our best shot. And if we fail and the $30,000 disappears, well, at least we failed trying. I can't sit by and just let this eke out over a couple of months. So I basically went to my co-founders and I said, all right, guys, we're at a crossroads. We need either an investor or we need a customer to survive. And I'm the only one that can do both. So I want to take this 30,000. I want to quit my job. I want to use that to go find us one of those 2 things. And it was a very difficult conversation because, you know, they also wanted to be a part of the company. They also wanted to help it get to where it needed to go. But unfortunately, the skill set that I had at the time, they were both two very good technical product developers. That wasn't the skill set we needed. We needed the money in the bank, right? And you fast forward about a couple of weeks later after that decision, we had not only $150,000 in investment, but we also had our first customer. So, you know, good, lucky, blessed, you know, kind of whatever you want to call it, you know, it was the right call to make. And fast forward 2 years now, and that's actually 2 years almost to the month here in a couple of months where we made that decision. And we're just in a completely different spot in our story. So it's pretty cool.
That's amazing. You went from 0 to customer and investor in how many weeks?
About 3.
3. Oh my gosh, that sounds amazing. Other founders listening, that is not normal. Sidebar. Yeah. Well, that sounds incredible. So I'd love to hear a little bit more about who that first customer was, because I know that that's a big part of the story of the work that you're doing today.
Yeah. So the first customer is it's interesting because as you know, anybody who's working in banks, like projects are constantly moving, things are getting shuffled, budgets are getting moved. So that first customer is still a customer we haven't launched with yet, unfortunately, because of delays on their end with other technology. So we got that customer and we're still waiting to implement with them. And since then we've gotten more. So it's just kind of interesting how these things shake out, but they were the ones that kind of got us to be able to unlock that capital and allow us to just keep surviving. And I've got a great relationship with them. And it's interesting, the more real, and, you know, you mentioned being candid on the podcast that we have, the more real and candid that I was getting in my meetings with individuals, both investors and with customers, the easier it was to build relationships and the easier it was to close deals. So I kind of learned all those things in that really short time frame in those 3 weeks. And it's just helped us get, you know, even, you know, kind of unimaginable at that point where we are right now, but it really helped directly get us to where we are today.
Very compressed learning.
Very compressed. Yes.
Yeah.
lots of calls. I would say I probably did, oh my goodness, I probably did 75 calls in that 3-week time frame. Like it was an insane number between the banks and the investors. Insane amount of I'm very thankful that those people would answer my emails and get on a call with me first off. Like that was a huge blessing. But the more reps that you get, it's just the easier it becomes, right? I mean, just sheer, you know, repetitions is a huge component of it as well.
Yeah. So you said calls between banks and investors. Today, one of your major investors is a bank, which makes Finotta, I think, really special. So can you tell us a little bit about your relationship with, I believe it's First United, a $13 billion bank in Durant, Oklahoma, actually close to my neck of the woods?
Yes, that relationship and story is just, it's such a incredible chain of events. Basically, I worked with one of the senior level executives at the bank. It was in Dallas, which is where he's officed at, visiting other banks, pitching to other banks, basically doing a road show almost. I do this thing where I kind of just drop myself into a town sometimes and just like try to get meetings while I'm there. And Ryan Sushala is the gentleman at First United. And I basically cold emailed him or cold LinkedIn messaged him and said, hey, I'm in town, would love to catch up. We worked really closely together and just was hoping he remembered me, and he did. And I went in and pitched him. And I remember going up to like the 10th level in this skyscraper downtown Dallas and looking out. And what was interesting is that the technology that we built or have built is really based on financial journeys of customers and like how to basically help, basically as a bank, help that customer get through their financial journeys. And it's crazy because the elevator doors open and the first thing that I see on the wall is a financial journey map that's like in every branch the bank has.
Wow.
It just stuck out
really
to me.
different. That's
It
really
is,
different
yeah.
for a
It was
bank
really
to,
cool.
I mean, a lot of the banks that I've worked with, they know that journey mapping is something that they need to do. And it's like on a list somewhere, but it's very difficult to get that done. That is incredible, actually, that was something that was front and center as soon as you got off the elevator.
And that is just like an inch deep into a greater story of how unique of a bank First United Bank and Trust is. You walk around the corner and they have all of these different different books in their lobby for their customers to just take that are financial health books and increasing your financial knowledge, like financial literacy stuff, and the Millionaire Next Door, like all this stuff is just sitting there in the lobby for the customers to have. And that is in every branch for First United. Wow. It's just stuff like that. So I immediately thought like, wow, this is just radically different. And I go into the meeting, and within the first minutes, with the first like 15 minutes, I'm going through my pitches to the technology that we built. And Ryan basically says out loud, "Hey, are you guys raising money?" And again, I was just kind of taken aback. I was
yes.
like, we're always raising money.
Right.
And he was like, "Okay, just keep going." And so I finished through, and basically fast forward, we had built something that they had wanted to build themselves for the last 5 years. They wanted a financial journey, a type of technology in their mobile application. They wanted this idea around a financial health, scoring system in their mobile application. Well, it just so happens that Finotta has a financial health leveling system, which plays off of a score. And we have a financial journey manager, which literally guides a user through their financial journey, whichever journey they're on, right? So all those things were found out within that first hour-long meeting. And from that meeting to the next one to the next one, it just was complete alignment across the entirety of the bank. And we had we not only had a new customer, which was great, but within 6 months, they were actually a full investor in the company as well, led and fully funded our $3 million seed round, allowing us to kind of just unlock a whole new ability for our company to output not only code, but also telling the story of Finotta, which you see in the podcast. And then also just doing a really cool partnership with them, where we're literally building the technology directly with them and their users and their employees. So when we release new things to our customers that are outside of the bank, outside of First United, it's been tried and tested and it works, which is it just creates this beautiful rising tides lifts all boats environment, in my opinion.
Absolutely. And for future bank customers, knowing that it was built with a bank, I'm sure gives them a huge degree of peace of mind.
Yep, absolutely. We used to get a lot of questions around, security and compliance and, all of these things. And now that we have the bank behind us, we don't really hear those questions anymore, because they know that it's already been tested in an environment that's live with users and real money. And the other kind of just novel thing is the fact that it makes money for the bank, right? Like, it's one of the first, if not the first, technologies that can be embedded in a mobile application and then start churning out revenue to kind of pay for the mobile application and then some. So it's just really novel ideas that we've had created and now have validated with this really big banking partner of ours.
Let's dig into that a little bit. Can you tell me a little bit more about what these journeys look like and where the revenue opportunities come from those?
Absolutely. So the financial journeys are really everything that your customers at a bank are experiencing, right? Like, you've got folks that are just, first off, you have folks that don't know anything about what to do. They don't want to talk about it. They don't want to talk to somebody. They don't want to go into a branch. They don't want to do anything but just sit in their, unknown, but they do want help. They just don't know where to go. And it's embarrassing and it's tough. It's very different. Finances are just very emotional. There's a lot to it. Then there's users who want to build an emergency fund, but they don't know how to. There's users that are paying off debt, student loan debt, medical debt, all those things. Then you have users that are building wealth, and then you have users that are building businesses. And at a bank and at a credit union, like, you have all those things, you have all those customers. And typically you have to pick, a product that can only service one. Well, with us, we service all those financial journeys, all within one unique product. And within those journeys, you have different what we call product conversion events, where, hey, this customer might not have an emergency fund, and we can ask them to open it up in the application, and then we can actually open it and fund it in the application without the customer having to go to a different spot or call a branch or call a bank or anything like that. It happens all in that environment in real time. The other side of that, and then when you do that, right, you're able to create revenue based off of the fact there's a new account opened. It's with a customer that's already bought in, and we can fund that account. So all those things are happening at once. And really the second big one is with, more liability or wealth accounts, where you have a customer that's already with you, but maybe they need a mortgage. Maybe they need a refinance for their student loan or a credit card. Well, right now they're getting hammered from all of those fintechs that we've always heard the last couple of years, right? They're getting hammered to buy with those companies. And instead, we can actually bring all of those capabilities directly in the app, regardless of what your current capabilities are as a bank. And by doing those product conversions along a financial journey, it makes sense to the customer because like, oh yeah, I do need that. And here's the reason why, with a little bit of financial education baked in. And now you have that customer who's got a better product. Maybe they saved, maybe we even put money back into the customer's pocket. Maybe we did a student loan refi where they saved $100 a month by doing the refi directly in the app. And even if the bank doesn't want to provide a student loan refi, we have the third-party partners that'll come in, provide that product for the customer, and then we split that revenue with the bank. So basically the bank gets a double dip. They get non-interest bearing income and interest bearing income all within the same application. So that's a lot to take in, like, in 5 seconds, but that's like a high level view of how that actually works.
No, I think that makes a ton of sense. And anytime that you can take friction out of cross-sell, people's ears are going to perk up. So yeah. So you were a banker in a past life. And so I'm really curious about what your experience working with the bank so closely has been like. Did anything surprise you or were things a little bit different on this side of the glass, or what was that like?
Yeah. So I've always made this joke that just banking technology is it's awful. It's just broken. There's just so many things to fix. And I think the thing that we didn't realize, because being a banker and then leaving and becoming a technologist and then kind of coming back and selling to banks, I didn't realize like how bad it really is, like how difficult it is for a bank to make, or a banker to make decisions that service specific parts of a company. And sometimes they work out and sometimes they don't. And like the ramifications of that and the ramifications of being wrong and the ramifications of messing up are just so high. And I think I've developed a lot of empathy for that, whereas I just didn't have access to that knowledge before. And it's difficult. And there's so many technologies being built every day. Like, how do you make those decisions? How do you pick the right one so that you can really ascend and help your customers? And I think being a part of the bank and getting to see that behind the curtain view has just helped tremendously in the ability for us to help solve those pain points for those bankers.
Awesome. Well, certainly so many elements of your founder story resonate with the folks that are listening, but we also have a really amazing audience of bankers here listening. So what would you like to leave bank leaders with after our chat today? Other than, of course, like where to find Finotta, which we'll do at the end, but like message wise, what thoughts would you want to leave with our bank audience?
Wow. I only get to pick one. That's going to be tough. I think that the number one thing I would like to leave them with is just around their customers. There's a lot of help that technology can provide. It's not even about Finotta, like put Finotta aside. There are so many cool founders building so many cool companies that can help do a lot of things at an institution. And I just would implore that if your digital strategy is not where you want it to be at today, if you talk to somebody like me, or you talk to somebody who's like me at a different company, even if our product can't help you, we will help you find the product that will help you, because we all know each other. It's kind of like, it's just a little group of people. It's not very big, because we're all a little bit, we have a few screws loose. Like I mentioned pain tolerance earlier, right? Like we're all just kind of weird. So we all know each other, and just starting that conversation of how you can help your customers in that digital channel will help you tremendously in so many different ways, and will help you find those people, regardless of if you end up going with our product or not. And I will say to the founders that are listening as well, and this is kind of what I say to everybody, like if you have an idea that you feel that like that itch to go do something, go do it. Because you'll be so happy, even if when you go through those high highs and low lows, you'll be so happy 4 years later, 5 years later, 10 years later, that you made that jump. You're going through a jump right now, which we've talked about. And it's the most fulfilling thing that you'll ever do. So
waking up definitely feels different when you're working for yourself and for your people.
100%.
Yeah. Well, thank you so much for joining us, Parker Graham, CEO and founder of Finotta, Finotta, right? And yes, where can people find you guys?
Oh my gosh, you guys can find us on our website, www.finotta.com. You can find us on our LinkedIn. We do a lot of fun stuff via our LinkedIn. Basically, there, just search bar Finotta. Our podcast is Once Upon a Startup. And this just got released a couple of days ago, but we will be presenting at Finovate Fall. So if you're in New York,
excellent.
Finovate Fall, we will be there and would love to chat with you.
Awesome. Well, thank you so much for taking the time, Parker. Tell the rest of the team hello as you wind up your all hands, and hope you have a great rest of your day. Thanks for joining us.
Awesome, Amber. Thank you so much.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.